What's going on, traders? Sandra O'Connell with Pristine Capital coming at you with yet another market recap video. It's January 7th, 2022, another down day in the markets. Today we're going to talk about the price action for today. We're going to go through my trades for the day. I only placed one trade today, trying to keep it a little bit less active in this, bearish tape. And we're just going to talk about, mindset for how to approach this market. And if you're feeling like despondent, maybe how to deal with it. Because I notice there's a lot of that in the marketplace now. So let's dive in. Before we do that, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, don't YOLO your entire account to any one of my trades or anyone's trades. Never do that. That's bad. All right. So indices, we had the S&P 500 as measured by the SPY, closed down 0.4%. Not really even a big move for the SPY. We had the Nasdaq QQQ finished down 1.08%. IWM small caps down day 1.16%. Red. Dow Jones basically flat. So the Dow Jones not even that bad. And then the ARK Innovation ETF could not manage to bounce. The interesting divergence is that volatility really got crushed in all of these indices. So that's a positive divergence. And then the breadth you can see was negative in everything except the Dow Jones. But I will say this isn't like washout negative breadth. SPY was almost even. So yeah, there's a lot to not like here. And of course, like if you're losing money today, I'm sure there's a lot of reason to be upset. But let's dive in. So, for me, about 2 days ago when my trend model flipped, I cut out a ton of risk. At one point, I think I had like 72% cash. Now I'm in 48% cash. So one thing I'd recommend for anyone, because I was listening in on some Twitter spaces today and I just hear like complete despondence. I've talked to friends that are traders and just complete despondence. Like it's kind of crazy. I'm like, geez, this is insane. Like I feel like maybe there's people that just haven't cut any risk. I'm not too sure, but yeah, if you're feeling like, oh my gosh, this is too much for me to handle, you have to take some risk off. It's kind of crazy. I don't even think that really, I didn't even think that really needs to be said. But yeah, never do anything that you're uncomfortable with, for sure. Let's take a look at this heat map. We have Nvidia down 3.3%. We have Tesla down 3.54%. Those were sort of the laggards that kept the market down today. So those two are really weighing on the Nasdaq. I have a couple of trades on the Nasdaq for bounces that I put on the other day. Microsoft is one, Apple's another, and Facebook is the third. But yeah, so my bounce stocks, they did okay. They were basically flat. And take a look at this. There was some nice strength in the financials, nice strength in energy. So yeah, some areas of the market that were really just fine today. Looking at our sectors, let's take a look at those fine areas. We have energy, nice positive day. Regional banks, European financials, the XLF ETF. So yeah, those financials and energy holding up just fine, whereas everything else is really struggling. So you can see red pretty much across the board. KWeb was actually our biggest winner for today. And that relative strength, I'm really taking note of it, that this is moving up the list. And it looks like once that year flipped, then investors, they're adding some flows into Chinese stocks. So really the only area of the market that's getting some sort of January effect is China. Style factors. High div, low vol was up. International value. But then momentum, growth, and quality were all down significantly. So yeah, red day in this tape. And take a look at our seasonality. So this is another thing where it's like, you have to be prepared here. Like the seasonality is not going to get better into the end of the month. It actually gets worse. So yeah, like if you're already like crying, you have to take some risk off. That's the thing really. Like for me, I took my risk off a couple days ago. I'm actually adding little bits back here and there. But yeah, like if you're pulling your hair out, you're banging your head against the wall, like just, it's just trading. It's just the markets. Like if you really can't handle it, like just lighten up on your wrist. That's really all I can say. Let's take a look here. So seasonality, not really looking that good. That's another headwind for this market. and take a look here. So one thing that's interesting is my trend model actually flipped from a -3 to a -1 today. So that's a good sign, and that for me is incrementally more bullish, but my trend model is still red. So when my trend model is red, that's really when I have to expect, hey, the market can go to the downside. So for me, I'm not in anything that I'm not comfortable with. Like, you know, I don't have my portfolio exposed in such a way where if the market goes down, I'm going to be like, man, it went down again. Like, you just have to know, like, when you're in a downtrending market, it's possible for the market to go down. So that's really the mindset that I'm coming in with. But take a look, S&P 500 closed just above this monthly point of control, but just below the 50-day moving average. So there's really two ways to look at this. You know, you could take a glass half empty or glass half full approach. And so one thing is, hey, the volatility is coming out of the market. Look at what the VIX did today. VIX was down pretty significantly. Look at what the VVIX did today. Down significantly. So you can say, hey, that's good. I actually thought we might get a pop into the end of the day just because I saw, you know, the volatility really coming out. You can also see that as a negative where it's like, you know, volatility's down so much, the market's implying lower ranges, but we're not getting any traction to the upside. So again, you know, it's not my job to be like, I'm going to pick which one it is. I have to know, is the market going up or down? For me, it's like my trend model is negative. So I have to go in with the expectation that the market could keep going down. That's really all there is to it. Let's take a look at the hourly chart. And big catalyst for today was we got our NFP numbers. And look at this. So bonds. Wow, this is interesting. So bonds really just plummeted today. And I was pretty shocked the extent to which they were just falling apart. This is a very big move for bonds. So take a look at this. We reached all the way down to this Venom S2 pivot. Keep in mind, this monthly value area is all the way up here. 20-day moving average all the way up here. And we made a big move to the downside. So it looks like buyers did come in from those overbought conditions. So on Monday, could this be the day where we get a bounce in tech and maybe the financials sell off a little bit, maybe energy sells off a little bit? Yeah, that's certainly the case. That could definitely happen because now we've hit these very oversold levels. Now let's take a look at these yields actually and what they're doing. Let's look at this. I really like this platform. Koifin, it's pretty good. I mainly use it just for the fixed income data. Wow, so look at this. The 10-year yield is at 1.723. So we're right on the cusp there of a breakout in the 10-year yields. That's significant for sure. Okay, so we got that. Let's take a look at our Nasdaq. Nasdaq just continued to, you know, blow out to the downside along with those treasuries. Nasdaq, red candle. Now we're below this monthly value area. So again, we're below value. I do have a couple of bounce trades on here, but yeah, we're below value. So we might get the bounce, we might not get the bounce. I'm not going to put anything into a bounce trade that I can't afford to lose because we're in a downtrending market. So I think that's what it's all about. With trading, you can't put on any trades that you have to win. Like, oh my gosh, I gotta win this trade. If I don't win it, my life's over. You just cannot do that. I almost wish there were like bumpers for people's portfolios. So I run into people all the time that just can't really like internalize that. Like, just, you can't be going like all in on stuff. Yeah, it's pretty crazy. Russell 2000 is below the 20-day moving average, stuck inside value. Chart just doesn't really look all that good. And then the Dow Jones, take a look at this. So the Dow Jones actually looks pretty solid. Found support right above this top of value, and we tagged the 20-day moving average, or got pretty close to it. And yeah, we'll have to see if the Dow Jones can continue that strength. Let's take a look at my trades for today. Let's see what I did. And this is the one trade that I did for today. So I'm liking what's going on in these Chinese equities. And let's see. got long some TME common shares for $6.95. Let's take a look. We'll take a look at KWeb first. KWeb closed off the highs, but decent move. But what I'm really looking at is BABA. So KWeb, not really much in the way of strength just yet, but Alibaba already broke out of value, and I noticed Baidu did as well. BABA actually tagged this R1 pivot, put in a red candle, but we're in a pretty weak market, so I'm giving it a pass. 1 second. Alexa, stop. My Alexa's trying to tell me something. I don't know what she's trying to tell me, but yeah, so Alibaba looks pretty good. Baidu also looks pretty good. And I noticed a lot of these Chinese equities were really showing strength. And this is the benefit of, like, I stopped out of a bunch of positions 2 days ago. So now I can look at this stuff and be like, well, I see all this despondence in the market. I see these Chinese stocks look pretty good. I would imagine if sentiment comes back in the general market, hey, these Chinese stocks could really rip. Because these Chinese stocks have never done this. They never did this in 2021 where our US markets are really down and Chinese equities are leading. I think this is a new thing, so I'm trying to really catch this trend. The stock that I entered was TME, and this one closed right at the top of value. So I could have stopped out of this one, but I'm going to give it the benefit of the doubt just because we were in such a weak tape. But yeah, TME broke out earlier today, came back in to tag this top of value. But yeah, I'm looking for this one to break out, potentially make it to this 794. But yeah, that was the only trade that I did. Just want to remain disciplined and, just not deploy all my cash when my trend model is still negative. It would be great if this flipped positive, but I have to be open to the fact this might flip back to -3. Might have to stop at my TME. You never know. So yeah, it's all about just maintaining your flexibility. And another thing that I'll leave off on this for this topic is you want to maintain your flexibility, and you want to make sure that you're living to fight another day. Like, you don't want to be in a stage where you're just like so emotional that you're going crazy. The other thing too that will really help with that is, like, as traders, we find like we have to be looking at the market. And it's like we got to look at the market the entire day. We got to watch the price action. When we're in these like more uncertain markets, the trend is negative. It's not imperative that you watch every single tick of your portfolio or every tick of the market. You don't have to do that. So yeah, I highly recommend, and I did a lot of this today. When you feel, because there's sometimes, and like I'm talking from experience here, there's some times when the market closes and I feel like, God, I'm exhausted. And it's like the market didn't even do anything, or like I didn't make money that day, or lost money or whatever. And then there's other days where like I feel like $1 million. My mental's perfectly fine. And that's not exactly correlated to like, did I kill it today? Did I not kill it today? It's just kind of like there's some days where you feel like, man, I ran a marathon today, looking at the markets and watching it. You should never feel when you're in the markets like you just ran a marathon. If you did, that means like your emotional state is probably really elevated, and it probably means you don't have a plan and you're just like watching things and watching it. Best thing to do is for every asset that you own, create a game plan. And let's say like, for instance, let's say I'm not in Tesla, but let's say like you're trading Tesla, and let's say you're in a long position or something, and you're like, man, I would like Tesla to go up to make money on my trade. One thing that you can do, rather than watching the ticker all day, instead of watching it and hoping and praying and it ticks up, it ticks down, you feel like your brain is like going like this throughout the day, set an alert to where you would take your target, and then set an alert for where you would take your stop, and then click off of the chart. So like, yeah, that way the stock's gonna keep moving whether you're watching it or not. So just, that's really like my pro tip right there. It's so self-explanatory, it makes such common sense, right? But sometimes we don't do that, and myself included. Sometimes I'll watch a stock and be like, how was I watching that all day? Like, I could have just set my alerts and moved on. So I highly recommend that, like, especially when we're in this tape, set your alerts and then get up from the screen. That's going to preserve your mental capital, because I guarantee you we're going to have a really nice sequence for stocks in the future. And I don't know if it's going to be tomorrow, if it's going to be like a week from today, 2 weeks, 3 weeks, or even 3 months. Like, I just don't know. But it's going to come. So you don't want to like feel like it's never going to happen again. The market's never going to go up. You don't want to like lose all your mental capital. So just I highly recommend, take those small little steps that'll just preserve your mental. It's going to help a lot. Let's take a look at the options order flow real quick. Now, let's not go into too much detail because it is the weekend, and I don't want to keep everyone here too long. But take a look here. So we see Tesla, a lot of put flow going up. SPX, a mix of puts and calls. We got some March calls going up at the 3K strike, the 4680 strike. We've got some Apple going up, a lot of bullish flow. I have one of my bounce trades in Apple. Now let's see Boeing. Value stocks have been doing very well. Boeing, a lot of calls going up. Let's take a look at Boeing stock. Yeah, Boeing stock looks okay. Not in the best trend, but hey, with these value stocks going up, Boeing is doing pretty well. For this weekend, I'm going to make sure that I'm doing, my typical rounds, going through the markets at a high level for our weekend market analysis video, taking a bottom-up approach as well. So I'll be doing that all weekend. I'll be sending that workout to all of our Pristine Capital members. With that being said, that about does it for this market recap video. Hope you all had a great session. I will see you all on Monday.